Watch his exceptional story, Pursuits by Chadha, only on Bloomberg Quint.
Back with Countdown, right? Okay. Back with Countdown right here on Bloomberg Quint. And it's been a steady show from NIIT Technologies in the December quarter, with the margins expanding to 15%. Agam Vakil caught up with the CEO, Sudhir Singh, to discuss the key highlights of the quarter gone by and started by asking about the outlook going forward. Listen into what he had to say.
The outlook going forward continues to be very robust, Agam. If you look at this particular quarter, the revenue number has gone up 28.5% year on year, and it's gone up 7.1% quarter on quarter, as you talked about. Equally importantly, operating profits have gone up 39.4% year on year, and our operating margin at 18.6% for the mid-tier is possibly best in class now. So we see the recent quarters, the last 5 or 6 quarters, as a very strong validation of the strategy that we've put in, the structure that we've put in, very importantly, the new leaders that we've hired. And we believe in some ways we are just starting. So we don't see the momentum tapering off. We expect to see the momentum continuing going forward.
Right, so the investors will certainly be heartened to will hear that out. But I also want to know about and perhaps understand a little more. What we've seen in the industry at this point in time is a little bit of a talent crunch, because of which we are seeing a rise in people's costs. At least that is the case for some of your peers in the industry. Now, I do understand that you guys have built a good team out there, at least as far as your top hierarchy is concerned. How are you witnessing these trends right now with respect to hiring costs and perhaps the impact on margins, if you can give us any outlook here?
So Agam, I think the proof in our case lies in the results that we've shown. Our margins at a point in time when, you're right, costs have been under pressure, have continued to rise. And as we've said in the past as well, we think that the 18% margin on a yearly level moving forward in the years to come is a sustainable number for us. So we understand costs are rising, we see that, but the productivity measures that we put in place, the cost outs that we have done from areas that were not absolutely critical to the organization, have allowed us to offset the issues that we've seen around price cost. We expect the margins now, where they are, to be at a level where 18% or plus, as we've said earlier also, is a number that we think we can continue to deliver on.
Right, Sudhir, if you could also tell us a little more about the deal wins this particular quarter and the nature of these deals and how they are expected to pan out over, say, the next few quarters.
Absolutely. We were very happy with the 2 large deals that we signed, because both these large deals represent incremental revenues for us in the quarters and the years to come. The first one was a very interesting large deal. That was a large deal that we've signed with an insurance client. And this is a very new client, opened just about a quarter or 2 quarters back. For this client, we've secured a complete order to help them do a complete cloud-based insurance platform rollout. So that's a new client, almost new client, large order that's been booked from them. The second large deal that we've secured again represents incremental revenue from our point of view. And out there, what we are doing is we're going to set up a very large offshore center, or a pool of resources within an offshore center, which will help one of our large BFS clients roll out all enhancements globally and changes to their largest financial platform.
Okay, and perhaps a final question then, Sudhir. I just want to better understand about your key verticals. I suspect you are seeing increased traction with respect to transportation, and well, of course, you've already spoken to a certain extent about insurance, but if you could also give us an idea about how financial services is panning out for you.
Financial services is working out well for us, Agam. If you were to look at the last 2 or 3 quarters, the compounded quarterly rate would be more than 5% for financial services. In financial services, our focus continues to be on asset and on wealth management, and we continue to focus on the securities operations transaction processing space. In those areas, we continue to see demand, and we expect that financial services like travel and like insurance, which are the other two verticals for us, will continue to move forward as planned.
NIIT Tech, and that's the management talking about the numbers flattish in the session today. The market's flat as well. Let's try and talk about what to do in a scenario like this. Shubham Agarwal of Concept.com with us on the show with his thoughts, as is Rahul Randeria, independent market expert, joining in. Gentlemen, both of you, good afternoon. Thanks for joining in. Some pressure on the markets offset predominantly by Reliance Industries. Rahul Randeria, is there an index strategy that you have today? Would you trade the index today?
Yeah, good afternoon, Neeraj. If you look at the last 3 days of maybe intraday charts, it has been a seesaw market and it has been moving in a very broad range. On the weekly chart, both the indices are trading with an inside week pattern. So definitely it is a congestion range, and definitely at current levels, looking at the current setup, I feel that in next week we could see a breakout on the upside. Bank Nifty has failed to break 27,613 on the upside, Bank Nifty spot, and Nifty spot has failed 10,930 on the upside. Definitely these 3 days of consolidation seems to be looking very poised for an upside rally, and I feel in the short to medium term we could see Nifty testing the level of 10,999. So at these levels one can buy in Nifty. In Bank Nifty, definitely on the upside, current level also one can buy and accumulate. On the upside, I have a target of 27,756 on the Bank Nifty spot. On the downside, one should keep a strict stop loss below 27,300. So definitely, it is a buy on dip strategy, but one has to wait for the breakout. So I'm anticipating a breakout in the next week. So definitely, it is a buy at these levels.
Okay, let's talk about some stock calls. Then you've got a buy on Adani Power, and you've got a sell on REC.
Yeah, both a contrary and call in the same sector, or one can take it as a pair trade also. So definitely traders can buy Adani Power at current levels and on corrections to 49.80. On the upside, positional target is 56, and one should place a stop loss below 48. My second sell call is REC. Traders can sell at current levels because we have seen an engulfing bearish pattern at current point of time, and on rallies to 128. Downside target 118 with a stop loss above 130.
Okay. We've got Mayuresh, Joshi and Shubham Agarwal also will be joining us in just a few moments. Shubham is there, I'm told, and Mayuresh will be joining us in just a bit. Shubham, let's run through your index idea first off.
Hi, good afternoon. If you look at the index, I think for a very long time it has been trying to chase the level of roughly 11,000, and it has not been able to do so. So I think the strategy that should be deployed at this point of time is that, rather than preempting, my stand would be that, unless and until we see that level getting breached, we should not really anticipate a breakout movement. And if you look at the options data, 11,000 call, despite the fact that the market is going firm, has seen additions in the call writing space, and on the other side we have a lot of put unwinding, which is again indicating that the market is not showing enough confidence. And if you look at the volatility index after a long time has started seeing a breakout, which again means that there is some mild negative which is getting formed. So I think unless and until that point of 11,000 gets reached, my strategy would be to go short and stop in reverse if at all 11,000 gets reached on the upside. But for a trade, I would prefer Bank Nifty because Bank Nifty was in a wedge formation, and we have seen that a couple of days back there was a breakdown in Bank Nifty, and now we have a pullback. So a very safe strategy with options, 27,300 strike put option for the weekly expiry can be bought at the current level. My target for the same would be 150, and the stop loss can be placed at 45.
All right, got that. You've also got a few other stock calls that you would like to give us. So you're giving a buy call on HCL Tech, and you've got a long Bharat Forge put. So there you are actually negative on the stock. But coming on HCL Tech and your strategy on going long on the futures, the stock actually hasn't done a whole lot much in the recent past. Just the last few days have seen some amount of interest. But why do you like this one for targets of above 1,000?
Yeah, Yes, so if you look at HCL Tech, very clearly on the derivative data point, we have seen gradual longs getting formed, and the level of 925, 930 has been a support since a long time. And recently we saw a short trap getting formed, and immediately the stock moved back in the range. So whenever this kind of a formation happens, that the stock gets a whipsaw on the downside and reverses back, is generally an indication of a bottom, and we might see a decent move coming in from here. So the recommendation there is to buy for a target of 1,000, and a stop loss can be placed at 935.
Okay. Mayuresh Joshi of Angel Broking with us on the show. Mayuresh, thanks so much for taking the time out. 2 or 3 large ones to talk, and then a clutch of mid-caps which are in focus today. Now I want to start with Bharti Airtel and not Sun Pharma. This 6% crack on Bharti, Vodafone Idea 2 getting clobbered in trade today. What have you made of Jio, telco numbers and their commentary thereof on the tower asset sale and otherwise? And how do you now go about looking at Bharti Airtel and Vodafone Idea?
Afternoon, Neeraj. I think the numbers that Jio has presented for the quarter gone by, I think very, very encouraging and in the trend that it has probably been displaying, that it has been displaying over the past few quarters. So 280 odd millions in terms of total subscribers. The kind of asset sale talks that we're probably hearing is probably going to abet the long-term dynamics of this business. Again, the fiber to home, I think what probably comes out of that in terms of a medium to long-term strategy is going to be disruptive for the players existing in this market as well. And to top that up, I think the expectations from the 2 key incumbents. So I think you probably got some amount of respite that can come through specifically in terms of ARPUs as their low recharge customers are probably out of the way, because they probably stopped giving the bundled services to them, which probably will push ARPUs. But again, I think on a consistent basis, you are going to still see some amount of sticky margins play through, and the kind of capex requirements that are probably required to carry on operations, which will entail that free cash flow operations still become very, very dicey and sticky for the incumbents. So I think competition intensity, the race for revenue market share gains that Jio has probably stepped up the ante, I think that is also going to have an added pressure in terms of the overall numbers that can stack up. So yes, I think some amount of apprehensions still lingering on for the sector as a whole.
If you had these stocks within your portfolio, Mayuresh, what would you be doing right now? Bharti and Vodafone, I mean.
So I don't own any of these stocks.
Yeah, but if you did, would you swap and or would you take them off, sit on cash, whatever it may be, or would you get out of telecom right now? I mean, at least the 2 incumbent players.
No, so the logic was very clear, Neeraj, for a periodicity of time at my end. I think because of all the factors that I mentioned, I think the dynamics in terms of improvement for cash flows were still not expected to come through, and they still remain extremely lumpy at this point of time. And you've got concerns for both these players. So for Bharti specifically, I think the ICU revenues are obviously going to be on the lower side. On top of that, you've got higher networking costs, which will have a huge say in terms of the domestic wireless margins. The African business is something that is holding them up. And what happens in terms of the fundraising plan, if so, and if anything is on the anvil, is something that will be watched out. For Vodafone Idea, again, I think the subscriber loss is clearly going to get played out. But again, I think on a positive note, you're probably seeing again, I think the low recharge customers getting out for both Bharti and Idea. And at the same time, when you're probably talking about lower networking costs because of the tenancy exits, I think the margins should prop up, but that will not provide respite to the bottom line. So in a nutshell, I think the cash flows are still going to be very, very soft, very lumpy. Capex is still going to be very high. So this is one sector that I'll still probably not be looking at least for the next few quarters. I think financials is a space, very selective on that one, the corporate private lenders, where my belief is that the earnings potential shall be humongous over the next 2 to 3 years.
Okay. Mayuresh, I'll come back to you with your expectations on what results could come out from Wipro, but I quickly want to do a chart check before that. Shubham, I'll come to you. Wipro, the excitement post the possibility of announcing a bonus. Since that day, the stock has been on a tear on the upside, has moved past all of its near-term moving averages. Would you be a buyer in Wipro at these levels, or do you expect some bit of correction to come in and then at slightly more suitable levels enter?
The recommendation on Wipro would be, we have seen that Wipro is quoting at an all-time high. So obviously, the momentum is quite good. But if I have to take a fresh trade, I think I would wait for a pullback up to 335 because the stop loss for any long trade right now will be around 328, which is a bit far from the current level. And given the fact that the market is not seeing too much of momentum, I would not be a buyer at after such a big bull run. But obviously, if someone is holding the stock, I think with a positional perspective, the target in Wipro will be around 380, 390. But for any fresh entry, I think a pullback to the level of in the range of 340 to 335 will be an ideal scenario where one can look to take a fresh call on Wipro.
Okay, Mayuresh, Wipro, and going with the track record of Infosys and TCS for Q3.
So again, I think Devina, the large element in terms of how the revenue guidance has been, both in terms of the dollar guidance as well as the constant currency guidance. I think 1 to 3% is what they've probably guided for this quarter. So I think it should probably come in that range as far as the dollar revenues are concerned. On the IT services side, again, I think the EBIT margins have held up around 18%. So the management is again very, very confident of managing these margins. But in their two key verticals, BFS and communication is almost 30% of the overall top line. I think the growth parameters thereof are going to be extremely critical, both in terms of new deal wins coming through and the management commentary surrounding digital, specifically in this arena. On the healthcare side, which is almost 12-13% of their overall top line, I think the stickiness related to HPS is something that is creating some amount of headwinds. So any landscape in terms of what improvements they probably see is going to be well accepted. I think the energy vertical, again, I think with fall in prices, what kind of an outlook do they probably possess on that front is going to be critical. So Wipro has traded in a very broad range. What they probably do in terms of distribution of their free cash is also going to be extremely critical from a shareholder perspective. So yes, I think anybody who's holding on to the stock from lower levels can continue holding the stock purely based on valuations compared to the stack of TCS and the other players. I think Wipro is a tad bit undervalued at this point of time. But any positive management commentary can probably re-rate the stock. So I think it's the talking of the management and the landscape that will probably re-rate Wipro's fortunes over the longer term.
Anything in particular, Mayuresh, that you are watching out for from Q3?
So Devina, in particular, I think I'm looking at the financials. Within financials, again, as I said, I think the private corporate lenders, I think what kind of performance do they mete out is going to be extremely critical for the overall standing of this sector as well. What we've probably seen over the past few quarters, if they're able to probably strengthen on to the base that they've built up, I think there is every chance that the kind of re-rating that these banks have probably delivered can actually hold true even over the next few quarters. Even within the NBFC space, I think the interesting element here is going to be how numbers are expected to pan out, and though softness is expected to continue, I think a normalization in terms of both liquidity and rates coming down. The CP rates have normalized. You're probably seeing bond yields cool off. The management commentary surrounding demand and the overall cost curve leading to the dynamics in terms of how NIMs and spreads will pan out is going to be critical. So in this respect, I think the gold financing companies is something that I have a keen eye for because they were the least impacted by the NBFC crisis that we witnessed a quarter ago. And if the management commentary is very, very positive, both in terms of the advances growth in their core gold portfolio and the non-gold advances as well, with asset quality pressures coming down and the capital adequacy remaining strong, I think the return ratios are simply unbelievable at this point of time, both from an ROE and ROE perspective. So that should probably hold up in a scenario where credit growth starts picking up and the other legs start performing as well. So I think a few of these sectors is something that I'll watch out for.
Okay, got that. Stay on with us, gentlemen. Lots more to talk about and lots more of those chart checks coming up. But in the meantime, let's find out what has made it to Yash Upadhyay's list of Fab 4 stocks for the day. Yash.
Afternoon, Devina. So I'll pick up from where you left. So Wipro's about to come out with its numbers, and the stock is buzzing ahead of its earnings. It's up about 3% as Agam's been telling all through the day. Revenues are seen growing by about 4% to 15,167 crore rupees. Margins are seen expanding by about 260 basis points to 17% on a quarter-on-quarter basis, and a 22% net profit growth is what we are working with. But moving on from one earning to another, MT Educare came came out with their numbers just a while back. The stock is up 6% after the revenues saw a big 20% growth on a year-on-year basis, coming in at about 50 crore rupees. They reported a net profit of 2 crores in this quarter versus a net loss in the same quarter last year, but that is on account of a higher other expense of 113 crores in the base quarter, so that was reacting positive to its numbers. Alchem Labs was at one point up close to 4% after the announcement came that the US FDA has successfully completed the inspection of its Daman facility with 0 observations under the Form 483. That's up about 1% now. And the last stock I want to highlight is the IGL. Fresh longs building up, so the stock's up about 1% with high open interest build up of more than 13%. Back to you.
All right, Yash, thanks very much for that. Mayuresh, one final question before we let you go. While we've been talking a whole lot about IT and most of the stocks out there, the mid-cap IT seems to be left behind. Do you think this time around, Q3 for mid-cap IT could see some ray of hope, or the focus is going to continue to remain with the larger names?
I think it's going to be a mixed bag, because I think a few of these mid-cap IT players have delivered strong set of numbers in the quarters that have gone by. Again, I think the softness in this quarter and the next is a well-known fact for the industry as a whole. So I think both in terms of constant currency and the kind of headwinds that we've probably seen can play out in terms of EBIT margins. But I think the larger picture that probably still stays is how discretionary demand will play out. And if one really assumes, with the caveat, that the kind of slowdown that one expects in the US markets can play out in terms of the fortunes of IT companies, specifically in terms of order metering and order intakes that these companies can have. I think the kind of order books that these companies have, the kind of execution that these companies are doing, the part that digital is playing, almost 30-35% for a whole host of companies, adds to the margin profile. So a large element is on these specific product stroke services companies within the IT sector itself. Large cap IT obviously has held on. But even within the mid-cap universe, I think a reasonable order book along with better execution capabilities should hold out EBIT margins for a few of the companies within this sector. So I think something like an NIIT Tech, nuclear software is something that we are holding at this point of time and would continue holding over a longer period of time as well.
Okay, got that. Mayuresh, we'll let you go on that. No, thanks so very much for joining in.
Thank you so much.
All right, that's Mayuresh Joshi with his views, bringing in Gurmeet Chadha, CEO and co-founder at Complete Circle Consultants. He's joining us on the show right now. Gurmeet, good afternoon to you. It's a fairly consolidated market over the last few trading sessions. This week itself has been slightly more muted on what the benchmark indices at least do. It's been more stock-specific, more earnings-related. Is that something that you see over the next few months to come? It's going to be specific to earnings and specific to stocks?
Absolutely, Divna. You're spot on. I think the earnings will dictate the short-term movement which we'll see. I think we are also seeing some realignment in the portfolio as far as a lot of large HNIs and family offices I engage with are telling. So there is this rebalancing between the value and the growth themes. The consumption obviously was overweight in 2018, and it did pan out the way everybody thought. We're seeing some realignment from auto, private banks, NBFCs towards some of the better corporate lenders, some PSU names, some capital good names. So that's a bit of an investment versus a consumption kind of a realignment happening. Also seeing, we've been discussing this, that fixed income weightage going up in the portfolio as we have real rates of more than 4%, government doing, OMOs. And I don't recollect in the last 15 years I've been in the industry, I've seen 7-8% growth with 3-4% inflation. India's growth is always with, high growth with high inflation. Our average inflation CPI reading before 2015 was more than 8.8%. So I think there is the inflation numbers are going to remain soft for some time. So the sweet spot would actually make some of the valuation gaps bridge between not so in favor sectors and the favored sectors.
Okay, got that. Gurmeet, just stay on. Lots more to talk to you about, but let's get some chart checks going. And one particular stock is Linde India, which is down in double digits in today's session. The stock is down 20%, lockdown on lower circuit after seeing actually the last few days have not been bad. It has been one of those stocks which has actually seen a little bit of a move on the upside, but today's 20% has wiped all of that off for the week. Rahul, what do you do with Linde?
Yeah, as you said, the stock is 20% down, and it has lost all its gain of last couple of days. So definitely, again, some sort of more selling could be seen in the coming days. I feel that stock can test the levels of 560. So as of now, those who have bought a couple of months back and still they are holding on with gains, one should try to book profit at the higher levels whenever the circuit opens.
Okay, try and book profits in this one at higher levels according to Rahul. Some stocks are then in focus because of the kind of losses they've seen over in the last 1 month of trade. Future retail at 448 has been down about 20% in the last 1 month. Edelweiss has lost 13%. Emphasis has lost about 13% at 872. HEG 3,500 now on the counter. The stock's giving up 1% in today's session, but nonetheless, for the last 1 month has been down 10%. Shubham, HEG, Graphite India, a call on any of the two?
Yes, if you look at graphite, I think 750 was a very important support, and it's already quoting below that. And in between, we did see a dead cat bounce where the stock tried to surpass that level, but that never happened. So I think going forward, we might see some more selling pressure coming into place. And I expect a target on the downside of 590 to 580, so another 120 rupees downside from the current level. So looks like a sell, but because it is not in the F&O space, we cannot go short. And also in HEG, I think the up move that was seen on the stock was very, very sharp from the level of 3,200. And I think that gap that it created is getting retested now. So there's a continuation pattern on the chart, and there's a breakdown on the short-term chart at least. Even though the long-term trend might not be that bearish, but I think a pullback to the level of 3,200 is what we are expecting for HEG. So both the stock is an avoid, but if at all HEG comes to the level of 3,200, I think at that point it will be a nice buy for a medium-term perspective. But for the time being, if anyone is holding any of them, they should look to exit and buy it lower.
All right. Some more stocks then to watch out for. And while we are at it, Sun Pharma from being down 11% is now down 8.5%. So there has been some amount of recovery in the stock price, 389 on Sun Pharma. Rallis India down 5.5%. Rahul, do you track this one?
Yeah, rallies have been moving in a very broad range of 185 on the upside and downside 160 in the oversold territory. Definitely it is in the consolidation phase, because stock has seen a price damage from the levels of 290. So stock is trying to make a base at these levels. So at current levels, I would wait for some more confirmation. Let stock to consolidate at these levels, and then we'll take a call. But at this point of time, if anybody wants to accumulate, can definitely accumulate for long term. But for traders, it is an avoid.
Okay. Got that. Let's talk a little bit more. Gurmeet, and I'll come to you. The telecom basket today at least seems to be down and out. So be it a Vodafone Idea, be it a Bharti Airtel, which is down 6.5%. So that's a heavy cut coming in for a Nifty 50 stock on a day like this. What is the anticipation with regards to the Q3 earnings from the telecom space in light of what we saw coming in from Jio numbers, and also the fact that now we are talking about deleveraging and the management highlighting that they want to get rid of their non-core assets for deleveraging?
So, Devina, is it for me, the telecom?
Yeah.
Yeah, so I think this if you see the my preferred play will always be Reliance through Jio in the telecom space. And if you see Reliance, Jio has done a capex of 2.5 to 3 lakh crores. Now the wireless business annual turnover is 1.5, in terms of the overall industry is 1.5 lakh crores. So obviously they haven't done this capex only for the wireless business. So I think you will see this there's a big transformation convergence which will happen between online plus offline in this space through emergence of retail and others. So if you want to play telecom, I think Reliance is a better play, because you're seeing obviously there is some aggressive accounting in the way they account for revenues for Jio. But if you see the numbers, they're also talking of monetizing Jio assets, which you pointed out, by selling, the optic and the tower, the assets. Also, if you see the subscriber base, it's crossed about 280 million in the ending December 31st. I think that's a staggering growth, in volumes. So I think telecom, one has to probably get into maybe towards the beginning of the next quarter. That's when this price war will stop. If you see the ARPU, I think Jio reported about 130 rupees ARPU, which is relatively better than Vodafone Idea and Airtel at this juncture. So I think, and there's some study which has been conducted that if there is a 1-2 rupee jump in ARPU or a 1 paisa per GB increase in data, the industry profitability will go up by 1,000 crores. So maybe second quarter onwards is when you should start accumulating or getting into telecom as a contingent.
Okay, got that. Reliance Industries, though, is at the high point of the day, and that's what's probably lending support to the index, which is now just about bobbing its head in the green. Should bring out the contributors right now to see, what's helping the Nifty 50, and it has to be Reliance. 42 odd points coming in solely from Reliance in today's session. You've got Kotak Mahindra Bank up next, Wipro adding about 3 odd points, and losses coming in from the likes of Sun Pharma. That's the top loser. L&T losing out 8 odd points, followed by Bharti Airtel 6 odd points there, and Axis Bank losing as well, but absolutely flat. Take a look at just a quick check across Europe as well to see whether or not the trade out there is supportive in any way. So you've got the FTSE, the CAC, as well as the DAX. The trade open out there, as well as Dow futures. So up in the green and quite sturdy out there for the European markets. FTSE 100 trading high by 1%. You've got Dow Jones futures also trading in the green. So some support being lent by the global market picture as well right now. Reliance Industries, Rahul, what would the near-term targets be on this stock? Because it seems to be on a tear right now.
Yeah, Nabina. Reliance Industries, maybe 2 weeks back, we have covered in hot money at around 1190. Our target was 1207. So definitely, even at current levels, those who have bought, one should hold on for a target of 1270. But one should keep on trailing the stop losses. Maybe 1150 should be the trailing stop loss. So definitely, I am looking out for the target of 1207, which is a gap area. So one should hold on and ride on the rally.
Okay. Shubham, I believe you had a call on Bharat Forge. It was to go long a put option. If you've not already highlighted that for us, could you please do that?
Yes, so Bharat Forge, if we look at the derivative data, again, there are shorts that are getting built. And on the technical side, we have a pattern of continuation pattern from where we have seen a breakdown happening. And today's price action is again reconfirming that, going forward, we might see some further correction happening there. So the recommendation would be to buy an at-the-money put of 480 strike for a target of 20, and a stop loss can be kept at 6 rupees.
Okay. Got that. We're going to take a slight detour now, come back and talk a lot more with our experts. But let's take a look at what dealing rooms are recommending this afternoon. Yatin Mota and Darshan Mehta, both of them are here with their channel checks. Darshan, let's start off with you.
Yeah, so everyone's talking about this big move that's come in on Reliance Industries. It's up almost 3.5 to 4%. Currently, so there is enough traction, almost 4.5%, and the dealing room does believe that the rally will continue. The markets currently are not giving enough opportunities in terms of other stock recommendations, so the money obviously is flowing back into Reliance, which itself came out with a decent set of numbers. So there is traction that's happening on Reliance Industries. The other stock that's been spoken about actively is Apollo Hospitals. Again, a couple of domestic mutual funds are actively accumulating the counter. There is more traction, stock trading at a 52-week high. So there is enough traction while the other pharma companies are not doing well, while the other hospital companies are not doing well because of the traction and the strong expectation of a strong number this time around. Apollo Hospitals is something that's been spoken about. And the final stock is Jubilant Foodworks. Domino's came out with their numbers over the past 1 or 2 days. The commentary that they had was extremely strong, especially for the international operations, in which they believe that there could be significant amount of expansion that could come in, and that's what dealers are betting on, that probably this time around there could be more traction coming into the counter. But Yatin, what are you hearing?
Darshan, Kotak Mahindra Bank, and that is one one stock wherein dealers are expecting some good traction coming in. On the basis of F&O trends, dealers do recommend a buy today, sell tomorrow kind of a strategy. Of course, on Monday, the private sector bank would be reporting their quarterly earnings, so watch out for Kotak Bank. What also will be reporting earnings today post the market hours is Wipro, and dealers do indicate that ahead of the numbers, a lot of domestic funds have been buyers in trade. Remember, post the company announced the intentions to look at a bonus issue, we had the strong stock which is in focus. Infosys came out with good earnings. So for the entire week, Wipro as a stock has been doing extremely well, 3% up for that one on good volumes, almost 89 lakh shares traded on this one. And finally, SRF, that is also one stock wherein dealers do indicate that HNIs have a lot of interest in these chemical stocks, and SRF is one of those stocks wherein HNI accumulation is happening at every level.
Got that. Thanks very much for that, Yatin. That's a quick dealing room check that's coming in this afternoon. Let's take a look at IndusInd Bank and what that one has been doing. So the time since it's reported its Q3 numbers, the stock has actually just been going one way, and that's on the downside. You saw a little bit of a relief rally come in 3 days ago, but that's about it. Today, once again, the stock has seen some amount of pressure, about 0.5% lower. What would you do, Gurmeet, now that we've got the Q3 numbers to go by, and within the private banking space, is this a stock that is preferable over to some of the other names?
IndusInd, I don't think so. The street is too much concerned on the operating performance. I think whether it's those are names, whether it's the growth in fee income, whether it's their unique model of having a right mix of assets which are both corporate and retail. I think the concern obviously is on the disclosure with respect to the beleaguered name where they've done the provisioning, and we have seen that the market doesn't like so we saw that with Yes Bank, we've seen that with some of the other names. So while I like the bank purely on operating parameters, which is your cost to income, their ROAs have been improving. So if you take their current ROA with leverage of 11, the ROEs work out to about 16 to 18%, which is good for a bank. And mind you, it is still not cheap despite the the correction on a price to book basis. So my preferred pick would be more the ICICI, Axis, and SBIs, where I see clear recovery, the assets book getting de-risked, the NPL cycle playing out. So I would wait for some time before adding IndusInd Bank.
Shubham, would you be a buyer in ICICI Bank? The stock is pretty much back to levels of about 370, 380.
Yes, if you look at ICICI and Axis, I think these are the two stocks which has been consistently outperforming. And ICICI, in fact, has been in a pullback mode for the past 7-8 days, which is creating a good opportunity for accumulation. But I think this call should be not very short term. If one is looking to invest for a perspective of 2 to 3 months, then I believe that some of these banking names like Axis and ICICI can do really well. So not a short-term call, but with a medium-term perspective, I feel 430, 450 is the target for ICICI Bank, and the stop loss can be placed at 355, and it can be bought using this pullback. Now, because I have a short-term sell call on Bank Nifty, I think for some more time we might see some pressure happening in the overall banking names. But I think post 400, 500 point correction in Bank Nifty, some of these stocks will again become lucrative. So even now, or on a pullback to the level of 365, one can look to gradually accumulate. The stop loss will be 355, and on the upside, 450 is the target that I'm looking at.
Okay. Maruti Suzuki now stands at 7,361. We've got about 11 minutes to go for market closing, but that's managed to pull back from the lows of the day and just about 1/3% or so higher. Volumes not all that much, but still in the green. However, the story here is about how the stock has actually managed to come through from levels of about 6,500 that it was at just a few weeks ago back to about 7,300, 7,400 levels. Has the move been too quick, Rahul? Would you wait it out before entering into the stock?
Yeah, a couple of days back I've read in the newspaper that Maruti is going to increase the product price by 10,000 rupees on particular products. So definitely that could be impacting on the stock. positive side. At current levels, last 4 to 5 days, the stock has been moving in a very tight band of maybe a narrow side, narrow range of 7,400 on the upside, and on the downside almost 7,200. But looking at the current setup, oscillators, momentum oscillators are on the buy side. So I would recommend to go long at current levels. One should place a positional stop loss below 7,200 on the upside. In short to medium term, I feel that stock has potential to test the levels of 7,700 on the upside. So definitely at current levels also one can accumulate on maybe 56 rupees. Some sort of cool off comes in the next week, one should buy.
Okay. Gurmeet, we'll come to you and I'll get your view on Maruti in just a bit, but I want to quickly run through some closing ideas from our technical experts since we're just about 9 minutes away. We'll start off with you, Shubham.
Pardon, can you repeat that?
Your closing strategies.
So on the closing side, I think a couple of stocks that have been doing well. But the market overall, if you look at the market, the market is still placed in a range-bound kind of an activity, which is not giving too much of confidence. But if I still have to pick one name from the stock side, I think the movement that is there in HCL Tech has been quite encouraging. But on the other side, from the metal space, we have Hindalco, which is showing some amount of momentum, and the volatility is indicating that there might be a breakout in Hindalco. So I think for a purely BTST perspective, one can look to buy Hindalco with a strict stop loss at 206. And on the upside, I think on Monday, we might see a level of 214. So the market is not that encouraging, but still within this space, I think Hindalco is one of the stocks which might outperform.
Mm-hmm. What about you, Rahul?
Yeah, I have two buy calls. First is a buy call in Hindustan Unilever after the result, and the stock has already discounted the result. Today it is a high wave candle supported with very strong volumes. So swing traders, maybe for next week, one can buy at current levels, which is 1744 and on corrections to 1720. Stop loss should be placed around 17110. On the upside, I feel that the stock can test the levels of 1810. Second buy call is in TCS. The stock has been moving on the positive side because rupee is also getting weaker. So definitely I feel that the momentum could be extended from the current levels. For next week, I feel that TCS can test the levels of 1960. So one can buy at current levels with a stop loss below 1871.
Okay, those are some closing ideas from both our experts. Gurmeet, come to you on Maruti. And, while we've already seen most of the auto sales numbers with the last few months disappointing the street, that probably will show up in the Q3 numbers. But within the auto space, is Maruti a name that you would go by?
I'll wait for the, while I am, long-term positive on Maruti, but in terms of fresh accumulation, I'll wait for the quarterly numbers. I think there are three things we have to watch out for. One is, is obviously the impact which has had the volume which we have been seeing month-on-month auto numbers. If you see the Swift for the first time went into discount, in December, which is the largest selling model. But there are three, parameters which I think will probably, make the stock stabilize and possibly, do better. So if you see their mix, which is the product mix has improved significantly. It was 80% hatchback till about 5 years back. It's about 60% now. The royalty which they pay in yen, has come down to 60. Now the jointly developed models, the royalty would get offset. On Brezza, it's an INR royalty. So that's one thing I would like to watch out as far as this quarter goes. And I've been speaking to a lot of dealers who happen to be some of them clients as well. Despite a soft month, the market share is still 50%. And the kind of a reach it has, the kind of a network it has. In fact, I met their largest dealer in South. The top two dealers of Maruti sell more cars than the top, the bottom 5 car makers, in entire India. So it's early to write off Maruti. Also, I think you will possibly see now more value growth than volume growth in the entire PV space. There's a big shift happening especially in metros. We also pulled out some UP numbers and some of the state numbers. There, the growth was 5-7%. It's the larger markets which degrew. In fact, one of the dealer pointed that there's a study they have conducted where every car a Ola buys or an Uber buys, it reduces the demand for 3 cars. So this is an interesting thing to watch out for. So I'll wait it out for the result.
Okay, got that. That is from Maruti. What are the implications for some of the auto ancillaries now that the numbers themselves look so weak, the volume numbers? We've seen and we've spoken to managements where the pressure is still building up for some of these auto ancillaries. While the replacement market still exists, but it is considerably lower in terms of the kind of volumes they're pushing out. Gurmeet?
Yeah. So I think it would be similar because what we are seeing is we saw some discounting in December. There were cost pressures, and those are usually passed on to the OEM names as well. So if I were to pick from the OEM space, I think Motherson Sumi with the kind of price correction we have seen could be something one can look at again post results. I'd like to wait out for the results. They are again the leaders in wiring harness and rear view mirrors. Minda again has had a significant correction. It's just above 300 levels. Expect the sensor plant to get operational from next quarter onwards. So these will be the 2 picks I would like to look at this space. But as I said, I would like to wait for the results and see what's the transmission of cost which has happened.
All right, Gurmeet, we'll let you go on that. No, thanks very much for joining us. Appreciate you taking out the time. Anything on Jamna Auto, Rahul?
Yeah, Jamna Auto. Just hang on. Yeah, the stock has been under pressure for a very long period of time. The stock has been moving in a downward falling channel. The volumes are not that much supportive. So maybe unless the stock doesn't crosses 63 on the upside, I don't think so the stock would see a trend reversal. But definitely at current levels, one can slowly and gradually accumulate for the long term because the stock has seen a very significant price damage from the levels of 100. And currently it is just quoting around 60. So one can slowly and gradually accumulate at least 50% of the investment and rest should be bought above 63 rupees.
Okay, stay on, gentlemen. So much more to talk about. We'll get in the closing thoughts from you post-market closing. But yeah, here is how we are closing. Hardly any movement on the index, but don't let this deceive you because within the components, it's been as volatile a day as we would have seen in a really, really long time. There's a lot of gainers and a lot of losers. Banks haven't quite stood up to the challenge today, 0.25% lower here, and the mid caps and the small caps too have been rather quiet, or in fact have been pulled down in the session today. It's not the kind of close that we were looking for the week, and I'll tell you why, or we'll tell you why this has happened. They've now outlined the mid caps and the small caps too. I just want to briefly mention what's happened in the large cap arena. Reliance Industries has took rock solid 4.5% higher. Wipro about 3.5% ahead of numbers, as is Kotak Bank about 1.5% ahead of its numbers. Asian Paints marginally higher, Vedanta marginally higher in trade. What's not done well today? Sun Pharma 8.5% after the 6% crack. Bharti Airtel 6.5% lower. GAIL about 3.5%. HPCL 2%. Bajaj Finserv about 1.5%. Axis Bank 1.5%. So a clutch of names have come under pressure, but frankly, it's got to do with these two boys. Sun Pharma predominantly, but Bharti Airtel too, 6.5%. Putting on the pressure on the indices in the session today. L&T too could be one of the top contributors on the losing side. But if large caps were very, very volatile and choppy, I'm sure mid caps had almost the same route.
Well, they did receive a dropping in trade today, but it was definitely more stock specific. So we're going to start covering some of the stocks that have looked extremely weak in intraday trade today. So while the indices, saw a dip of almost 1%, individual stocks saw a lot more than that. So following the footsteps of Sun Pharma Advanced Research is a stock that gave up almost 13.5% towards the end of trade. You've got a Linde India, which has given up 20%, so at lower circuit by the end of trade today. Sun TV being the other one, 7.5% cut off in today's session, followed by an IDBI Bank that too looked weak in intraday trade. Dish TV, Reliance Capital, Repco Home and Emphasis are some of the other names which lost out anywhere between 3.5% to about 5% apiece. Within the aviation pack, and Interglobe Aviation, that stock declined in today's session. And from the pharma space, you had the likes of a Wockhardt and a Cadila look wobbly in trade today. Gainers then, Vakrangi is one stock which has been on tear, continuous 5-6 days of gains, and that to gains to the tune of 5%, which is the upper circuit move on the counter. Mindtree today looked okay for itself, about 2.5%. Kansai, Nerolac, Sterlite Tech, Torrent Pharma and Jubilant Life were a few of the other gainers in trade today. So that's what it looked like from a broader market point of view. But nonetheless, the advanced decline ratio still pointing towards the bears completely being in charge of today's session. Remember, including today's Nifty move, you'd probably have to say that you've ended the week for the index with marginal gains of closer to 0.5% or so in today's session, Neeraj. So
yeah, I mean, in the morning we were talking about hoping that the start indicated that we will have a start which will lead to the markets doing a reasonably okay week, but somehow it's not turned out to be that way. And we'll get the weekly performance as well, but just very quickly, the volumes today and the contributors today. The volumes, well, the cash market volume slightly higher than the last 2 or 3 sessions, but the F&O volumes a bit tempered, just about 5 lakh crores. Not the best day on the F&O side. It's surprising, actually. I thought that the F&O volumes would be much higher today.
But there's actually nothing much that's happened to some of the bigger names. Only a few, like you pinpoint on a handful of them, you'll get the action, and on which the volumes have been large. So on a Reliance, you would see a bigger number. On a Sun Pharma, you've seen a bigger number, but not the rest of the pack. So
true.
Amongst the 50 stocks, maybe just 5 or 6 of them.
Yeah.
But that's the contributors list. So pretty much at an even keel, which is why the flattish number on the Nifty 50. But the broader market advanced decline ratio, and then we'll get to talk a little bit more about the weekly performance of the benchmark movers. That's the advanced decline ratio. 1,100 stocks declining, about 430 stocks in the green. Let's pull up the picture for the week, and we'll tell you what's done what.
Well, Nifty 50 just about 1%, and led predominantly by Reliance Industries and Infosys. Those two have been the pillars on which this has stood, though you could argue that IT by and large has still had a good week, approaching that resistant point, but still ending the week reasonably okay. Yeah, TCS, Infi, Wipro, everything. The run-up has been pretty stellar there. Amongst the worst performers, Sun Pharma, yeah. Two days of losses, and that culminates to about 12% given up for the week. GAIL has been down about 5% and Bharti Airtel 2 today again adding about 6% on the downside, so looking weak for that one. Bring up the broader markets, maybe the Nifty Midcap Index. Vakrangi 5 days on a trot. Please be very careful if you're indeed looking to trade this one. While it's gone up 5 days on an upper circuit because of the clean sheet that they were got, but you never know what happens with Vakrangi and a few of the other stocks as well. They go up on a circuit, but they come down with equal gusto, and the retail viewer might get trapped. So you got to be a little bit careful when it comes to a stock like Vakrangi.
All right, this week, particularly for midcaps, has not been all that good. So while you did have even midcap IT doing okay, so Mindtree and L&T Infotech reported numbers today. Not much of a reaction today, but I guess the last few days' performance has helped it stay afloat. Amongst the bigger losers, Dish TV is down 16% for the week. TV18 has been down 10%, and Sun Pharma Advanced Research, again following suit in tow with what Sun Pharma did, it's down 18% this week.
Yeah, well, the small caps too, if we can just get that index going just once. Yeah, and Lux Industries, ITI, Jet Airways, volatile but up in the green. Real estate stocks, by and large, have been in the lead, and Sobha kind of filling in that space out here in the index. And NIIT Technologies, the result boy, up about 5% in trade.
I'm surprised Praj Industries has not made it to this list.
It had a bad day yesterday, maybe, that's why.
Yeah, so that stock, though, has relatively managed to outperform the rest within the same space, but not making it to the list, though. Amongst the bigger losers, Philips Carbon Black within the small cap space lost about 11%. But that's what it looks like for the week gone by. Let's get in some closing thoughts from our technical experts as we set up for trade on Monday. And we'll start off with you, Shubham.
Yes, so if you look at the index, there has been some very interesting formation. I don't know if you have observed, but the open interest in almost all strikes, no matter calls or put, on Nifty has seen a severe unwinding. And I think this might be because of the fact that from Monday, the margins are going up, and traders are looking to keep less positions open. So that's very interesting on the index side. I think Monday we will have more clues of how the market is taking this margin increase. But unless and until we see a breakout above 11,000, because that's still the heaviest call while strike. So unless and until we see a breakout above that, I'm not too much in favor of preempting that breakout, because the people who have taken that call for the past 8-9 instances have went wrong. So rather than buying preemptive, the strategy will be that if at all we see a breakout above 11,000, then we can exit our short positions, and stop and reverse is basically what we call. But so far, if you look at the market breadth, more from a derivative data perspective, 131 stocks have seen fresh shorts in today's session, and only 36 stocks have seen long. So I think very stock-specific rally has been there. But if you look at the overall market, I think the selling pressure has been overtaking. And unless and until the market breaches the 11,000 mark, I think the bias still remains on the negative side. So some of the interesting stocks for Monday could be short trade on HPCL and Asian Paint. So these two stocks have actually closed with a marginally negative bias. So overall, just to summarize, the index view still remains negative, and some of the stocks that can be taken fresh on Monday morning could be HPCL and Asian Paint on the short side.
Okay, got that. Rahul, some closing thoughts from you?
Yeah, on the Nifty weekly charts, it has formed a hammer with a lower shadow with a green candle. Last 3 weeks, it has been an inside week formation where we have seen a strong support at the lower levels. So definitely any pullback, maybe on the Monday, maybe around 10,850 Nifty spot level one can buy with a stop loss below 10,780 on the downside. Upside, I feel that Nifty can test the levels of 10,999, 11,000 being a psychological mark, so I would allow the market to break that levels, and then we'll take a fresh call about that. On Bank Nifty, again on the weekly front, 2 weeks have been high wave candle with a lower shadow, so definitely the momentum is undertone and momentum is bullish at the lower levels. On the banking stock, banking sector, the components are looking strong. So definitely any 50-60 point correction should be used to buy at the lower levels. On Bank Nifty spot levels, stop loss should be placed below 27,200. On the upside, I feel that Bank Nifty can test the level of 27,756 on the spot levels.
Okay.
Chairman, thank you so much for joining in today and giving us your thoughts. Really appreciate your time. And with that, it's a wrap on this edition of Countdown from Devina and me and the team that put this show together. Thanks so much for watching.